Good morning, everyone, and welcome. Before we start, we have a disclosure. Please be aware of risk in the future trading. All our videos are for educational purpose only. You're very welcome to follow any of our automated signal as long as you are on a sim. We're not responsible for your trade, and you're very welcome to follow any of our automated signal as long as you are on a sim. We're not your financial advisor. Let me see if we have a problem with the sound. Do we have a problem with the sound? Good morning. Okay, well, we got it. Before we start, guys, we have to be careful with the ES. The ES is sitting right on line with the support area at 4704. There is a lot of support area in here. I can see the auto trade. Thank you, Ben. Thank you, sir. I can see the ES have a heavy support in here, and I'm not sure this trade on the ES is going to be a winner trade in this one here. The reason is, if you look on the ES, there is been a heavy support on this line 4705. So if you are taking a manual trade or you are taking an automated trade and you have this trade on the ES, you have to watch out for the 4705. This is a crucial area, and if we're not able to break that support area at 4705, this means we're going back to the 4710. So if any of our members taking the trades on the ES, whether you are using 1 minute, 5 minutes, 2 minutes, whatever, it's not going to change. The fact is, we have a problem on the ES at 4705. We are desperately need to break this 4705 in order for us to have a winning trade on the ES. The CL is doing very well. The 30-year Treasury bond is doing very well. The Russell is doing very well, but the ES is sitting there, and there we go. This is what we are worried about. So in cases like this, I know most of the auto traders don't like to fuzzle with the chart. I know, I respect that, I understand that, but sometimes, because we understand the knowledge, we have the knowledge what's going on the ES, and it could be that trade a risky trade. And despite the optimization and all this, the auto trade has nothing to do with it. We have a spot, there is a support area, and probably that trade is no go. And this is the key here between making money and losing money. Sometimes when we spot something, then we understand if this market is going to have a problem or not. Two options here. You can close that position and get ready by pushing the button on the top, close position, and let the auto trade take another trade. You can do that. Or what you can do, you can break even a +1 tick, and then this way, if this market decide to go above that level here, this trade is not costing you any money. Please, this is very important when you are auto trading. Sometimes you bump into a problem. The problem is not coming from your auto trade. The problem is coming from the price action on the ES or NASDAQ or CL. Doesn't matter. Has nothing to do with your optimization, has nothing to do with your auto trade. The auto trade took a fine trade in here. And then what we did, we forced to break even a +1 tick. And the reason for that, we don't want to go to negative. The secret in the auto trading is not to make $1,000 a day or $200 a day. The secret is preventing going negative on any trade. And when we predict there is a problem on any given market, we need to take an action for that by maybe interfere with the auto trade and a break even. You know, yes, can the auto trade do everything by itself? Yes, it does. But in this cases, the auto trade has nothing to do what's going on. The problem is with the ES has been flirting with this 4705 from 10, you know, from around 907, because right now it's 10. So we understand the problem in here, and we understand this ES can, if you notice how the ES staying on the support 4704 and projecting from 4707. And it can go both of direction. Today is a Friday. It can go both of direction. And there is no, most likely when you take a trade, and if it's not going to your direction within the next minute, the longer you stay on that trade, the more it's gonna go against you. So that makes me nervous when there is an open position and it's not going anywhere. The longer we are staying on an open position, the more trouble we are in. So right now, we are sitting here between cat and dogs here, between if this ES able to break below the 4705 or finally is going to break the 4707. Your best choice is to take a quarter out of your pocket and flip it, because in this condition right now, it's showing we're gonna be closing that trade, you know, and with a break even a couple ticks. That's all what is into it. There is not much going on in it. And if you experience this, and you can see if the ES or any other instrument is not going anywhere, if you have a profit, $50, $100, $300, $500, close it. Close it and let the auto trade take another trade. It's better to close it with a plus than to keep looking at it and the market is gonna go against you and it's gonna knock you out with the stop loss. And there could be your stop loss is $300, $400, $200, unnecessarily losses. So this is a really, really important to another things also, even if you're not a wizard with a price action, you don't know what is support, you don't know what is resistance, you cannot see it. Maybe somebody else can see it. If we look at this market analyzer here, which you're gonna see a lot of it, the closer we get to the Christmas, the more you're gonna see a lot of threads on this market analyzer, because there is not much going on after the Thanksgiving all the way to the Christmas. It is the best time to do training but it's not the best time to close our eye and not looking at the market and just auto trading. This is could be disaster. Not because the system you are using, because after the Thanksgiving, what we are going to experience, which you will mark my word on it, it's been the same for the last 27 years, since when I was a kid. The market spikes. We don't know when the market spikes. Sometimes 9:30, 10:30. There we go, you see? Sometimes the market spikes 11 o'clock, 12 o'clock, 1 o'clock. It depends on those people's mood. But let's say if this market going to spike around 11 o'clock and you turn on your auto trade and you are waiting for that spike, maybe it's going to be 11 o'clock or 11:30. During this time, if your auto trade taking a trade, could be, and if you're not watching this 1 minute chart, it could be in severe damage to your account, and that can cause a lot of problem with your account. So we need to really keep our eye after Thanksgiving. When the market is spiking, we cannot be picky. And once we catch a trend, close it and switch to sim or to close your computer. It is the same song, the same story every year, and has not changed for the last 27 years. During the summer, during the Christmas, it's not going to change the story. People, they are in the different spirit, and they are not interested maybe, or they're trying to close their accounts for this year, which most of my colleagues, the ones I know for many years, they start closing their positions for this year, and to do their tax papers, get everything ready, prepaid, everything ready, and they don't wait till April, or they close all the books and they get all their papers ready by the end of the year, and then they submit it. They don't wait till the last minute. So as we see right now, this ES, if we look, it's been from at least 1 hour going in the same area between resistance and support, and on those days, when you see the ES is stuck in a channel, this is what exactly happening right now, stuck in a channel. If you cannot recognize it, you can get in trouble. If you notice, we have covered that on Thursday, Tuesday, and the last 3 months, and the last year. And we said many times, and I was covering that yesterday, that when you are auto trading, you should not auto trade ES, NASDAQ, Dow Jones in the same time. Now, let me show you why. And that's why we said when there is no trades on an ES, close your eye, turn into the CL chart, and you will find the CL is trending. And the biggest proof is right there. I can pick up any CL chart is making money. Any CL. Even gold is making money. Even on the scalper, gold is making money. And the CL is making money. Now, if we look at this picture here, why you don't need, if you were with me yesterday, and I said it is the biggest mistake to auto trade ES and NASDAQ in the same time, and if you don't know what you're doing, you can get in trouble. If we look again on the NASDAQ, you can see the NASDAQ is the same story between a resistance and support, and is stuck in that channel. So when you are auto trading, the ES today and the NASDAQ, you are already in trouble. You see? And if you are auto trading CLES, you are in a better condition than auto trading NASDAQ ES. Because if we look at this ES and NASDAQ, we will find they are stuck in the channel between a support and a resistance, and there is no movement. So this is the worst case you do by auto trading NASDAQ ES together. They either both make money or they both lose money. But if you set your horses on a different family, let's say on a CL or a 30-year treasury bond, and one ES or one NASDAQ, you have better option to make money than to be riding the same volatility as the ES and NASDAQ in the same time. So this is a small trick. If you are expecting to make money, let's say on the ES every day, that is not going to happen. You cannot make money on an ES or NASDAQ or YM every day. You cannot. Welcome to trading. Has nothing to do with your platform, has nothing to do with your knowledge, has nothing to do with your auto trade. There is no trader can trade 30 days. An average good trader, he have one losing day a week. An average a good trader. A disaster trader, an average 3 losing days, 2 winning days. The most disaster traders, they have an average of 1 winning trade and 4 losing days. Those are the ones they are totally uneducated, inexperienced. They usually lose 4 days out of a week. A good trained trader, he have an average of 1 day. It's not going to be successful. When we are stuck on the ES, like what we see, and it is the same story on the NASDAQ, and you are auto trading, if you cannot read the ES is stuck in a channel between support and resistance and not moving, when the market is in this condition, you cannot get hair out of a bull-headed man. That means your auto trade cannot get ticks out of the market if the market not moving. But when we split the auto trade, if you wanted to trade something else outside this family, ES, NASDAQ, Dow Jones, if you like a gold, you can trade the gold. If you like the CL, which I do, I prefer the CL for me personally. I like the ticks. I like the CL personally. Or if you want to, you can take one trade on a 30-year treasury bond. The 30-year treasury bond don't have this hule-bule movement like the ES, because all those small guys with a few thousand in their hands, they mainly trade in ES. Very rare you see a newbie guy trading 30-year treasury bond. So the 30-year treasury bond, the gold, the CL, you can see people trading CL for an older guys. They've been around maybe 3-4 years. They start understand the CL. They like the CL, and they start recognizing when the ES is not moving, the CL is moving. So to all the auto traders out there, and this is not about our system. If this market got stuck between the channels support and resistance, it's irrelevant which auto trade you are using. It's irrelevant if you are auto trading or you are a manual trading. It's the same story. It is the same story that the ES is on a support area at 47.05. Whether you are a manual trader or automated, it's still the same story and it's still the same problem. A guy with an auto trade is not going to have a different numbers than the guy is doing a manual trade. A matter of fact is, for the older guys, when they cannot find a trade manually, I'm talking about older guys, not just a guy pop out yesterday. When we notice when we cannot find an entry manually, that means the auto trades are not doing well, any kind of auto trade. And the reason is, like now, if you ask me which direction I will take the ES to take a trade, my best option for you is to just take a quarter out of your pocket and flip it. Because right now, we are not in this position to indicate if this ES gonna drive below that number or is gonna have a breakout above that number based on the 1 minute. Now, if I want to dig into it and for a longer investment, I can start bringing down the daily chart, the 15 minutes chart, the 30 minutes chart, and I can predict exactly where we are going with that. But for a normal guy from day-to-day basis and trying to auto trade or scalp the market, in this condition, when the market is stuck between support and resistance and stuck in a very tight area like we do, your best choice is, if you are auto trading and if you don't know how to do manual trading, turn on your CL, or you can turn on your gold, or you can turn on your 30-year treasury bond, and that will work. So if your auto trade on the ES goof up and lost a trade, you're not going to have two losing charts, let's say the ES NASDAQ losing at the same time. You will have, let's say, an ES is losing a trade, but the CL is making money. If you are auto trading the NASDAQ, and the NASDAQ, as you see, going hand in hand with the ES right now, trade the CL next to the NASDAQ, or trade the 30-year treasury bond next to the NASDAQ, or trade the gold. If we pick up any chart with gold, you will find that gold is making money. Here is a chart scalping with the gold is making money. So when the ES is crippled, the worst things you can say, and already had a trade for 560 and now is hitting another 1,000. So you cannot say I only trade NASDAQ, or you cannot say I only wanted to trade CL, I only want to trade ES. You cannot say that. You have to feel the market every day, and you have enough tools from scalping to swing trading to scalping to reversal to penetrate and figure out which tools you want to use and how you're going to spread out your trades. You should not be riding the same horse all day long. You should not be riding the same horse all day long. So we still have a couple of trades on the CL, and we will leave it alone. This one here has closed. We will leave it alone. Now look at this. If we look at the ES start losing ground on the ES, now it changed the whole momentum on the ES within minutes. Once we cross the 47.03, technically this number is on your chart. Technically is no longer valid for for a long trade. Once the ES go below that number, right now, that's mean we are no longer thinking a long trade. We are now thinking a short trade. So we need to make sure this number go below the 4703. That's mean we are going to start sinking, and probably, look, there is another one right there, 4703.25. So now we will see if this ES is going to give up and is going to start taking a dive to the short. If you are auto trading the 30-year treasury bond with it, immediately, because the 30-year treasury bond is working the opposite direction, if the ES drop and you are trading or auto trading the 30-year treasury bond, now you have $1,000. That means the 30-year treasury bond is gonna go up if the ES going down. If the bonds are going up, the ES goes down. So they always work the opposite direction. The fun story here, sometimes you find them going the same direction, and when you see the ES and the 30-year treasury bond going in the same direction, that means somebody is monkeying us around and playing game with us, those big, sharks, because those should not meet. Those should not go in the same direction. And when they go on the same direction, that means there is a play on the ground. So as we see right now, once this ES crossed, it is over for a long, and now the whole fundamental on this ES has changed from a long trade to short trade, and you can start nailing that trade on the pullback re-entry. If you are a manual trader, you should not start jumping on the short trade, because every number the ES is going back to reconfirm. No matter how fast the ES is going, it's gonna go back to reconfirm the 4703, and this is where you put your limited order as a sell. But don't try to chase this kind of movement in the market. Don't, because it's gonna go back and reconfirm those numbers. So don't panic that you are going to lose a trend. You're not gonna lose anything. The market will go back to reconfirm, and you can catch it on the pullback. Two ways to take a trade: either you can catch it on the breakout, or you can catch it on the pullback re-entry. It depends what kind of trader you are. As we see right now, the ES start dropping, and immediately you will see the action on the ES start taking, and is already in the money, and the market is going back to the 4703. If we wanted to be careful with our trade, what we can do, we can take this needle down so we can relax a little bit, which is already broke even, and the trailing stop is moving. That means our mission in that chart is finished. We no longer need to worry about it, because now we are on a free trade, on a free flight. As you see how the ES go back, pulling back, and want to reconfirm the 4703, there is a support area at 47 level. We will see how the ES is gonna be taking the 47. If the sell off is gonna continue, then our next level, it will be 46.98. So it is very important. If you notice, gentlemen, when you see the ES took that drop, immediately on your 30-year treasury bond, the money has increased and your profit has increased. So it is a very smart idea to not use the ES NASDAQ together and an auto trading. You pick up your own fight with a CL, 30-year Treasury bond, gold. And as we see right now, the gold is moving. The 30-year Treasury bond, you see how the ES pulled back? And this is very normal, this pullback, and should not be scared from it, because it has to go back and reconfirm those numbers, because the ES already dropped two support area across the 4703. We need to confirm those numbers before we start going farther down. So this behavior on the ES going back does not scare me. It is just confirmation of we are going short. Another trick when you are trading, if you are trading manually, in those conditions here, which I use a lot when there is a news and everybody waiting on the news to break out. One of the trick you can do, which sometimes around the Christmas or around the summer, when there is not much going on, you're gonna see some conditions like this. So in those conditions here, what you do when the ES was all the way up here, if he's going back up, if he's going back, reconfirming, I know it's reconfirming here, I'm not worried about it. What I will do, I will put a limited order, sell order. If this ES going back, then I get filled on the way back down. If this ES keep going back up, I'll dismiss that trade. So there is a lot of tricks that if we are not sure this ES is, or any other market is pullback re-entry, we can go ahead of the market and put a limited order, whether it is long or short. If this market decided to go long, we can get filled, or in this condition here, the market is going back to confirm and is gonna drop back down, and we know that. So the best offer is to put a limited order below the market price, like what I'm showing right here. So I will be putting a limited order here. So if this market decide to go short, I get filled and the market keep going down. So that movement on the ES does not scare me, because every number the market achieve has to go back and reconfirm. Always has to go back and reconfirm. So as we see here, this pullback is not surprising, it's confirmation. Those double support few minutes ago, they turned back to double resistance. So now what we need, confirmation, those double support area become a double resistant area. And that's what we are looking at right now. The confirmation that become a resistance is no longer, they are support area. So once we know that, we are okay. So we don't get excited when we see a little pullback, because we understand the game. We understand how they function. We understand this is a pullback re-entry and nothing to be concerned about. And this way you are in charge with your trade. The market coming to your condition, you're not at the mercy of this market. And now as we see, this market is confirmed and now we are taking a different direction. If we look at the NASDAQ, we can see the NASDAQ did the same thing, whether we like it or we don't like NASDAQ, or you trade NASDAQ or we don't. The NASDAQ came in to the double support area, go back, confirming this resistance line at 16430, and now we are waiting on the ES to go farther down, and the NASDAQ will follow. And if here what it is really, what to really confuse traders, and they start get confused, and they start react differently or react fast, that this condition of this ES, how it's moving, it took a little spike and taking a break, confirming, and there is no other action right now. Is very slowly you will see the ES right under our nose start dropping, tick by tick. Before you know it, by 12 o'clock, he's all the way down there, and you missed the trend. So stay consistent on the bigger picture, and don't let it flip right under our nose. You know, keep your eye on it, how it's moving. If this double resistance line going to hold or not. So this is where you can identify the play in the market. For auto trading, I can see we have secured some of the profit on the auto trade, and I care less what is going to happen anymore. If this ES go back, I'm okay with it. If the ES, you know, this is a really tricky. Look at this. The ES dropped to 4,700, and the ones they just trade in indicators, or they are auto trading ATRs and MACDs, from the 4,700. Now we are at 4,704. Here is the fun part about it. Now they're all going long. They're all going long. All those auto trades, they're going long. Because this is enough for an auto trade to reverse a trade and start going long. And here is the puzzle. There is no long. There is a pullback re-entry. And this is where no matter how much this guy is going to optimize his ATR auto trade or his MACD, you know, which a lot of people rely on a MACD, but the MACD, there is limitation for it. Both of the indicators that just follow the market, they're not predicting anything, really. When the bars goes up, the MACD and ATR says is up. You know, don't need a brainer for that. Then they give you a couple moving averages in the MACD to get you lost on it. The MACD is just, is good for a split second, estimating what's going on, but you're not going to go ahead and make a living out of it. You know, an ATR is a dummy moving average, above or below. An ATR, how is going to predict for you there is here a pullback re-entry? How he's going to predict that? For him is long, because across the moving average is a black box. Is the dumbest indicator ever come out to the market is the ATR, because it's just a moving average above, below, simple as that, and can give you nice shiny colors on your bars. But is it something to take out the market in 2021? Honestly, I mean, a moving average taking the market, all market, ES, NASDAQ, Dow Jones, 30-year Treasury bond, gold, just a base moving average. how is your success rating with that? So those guys, they know your limitation, and they know your indicators, and they know most likely you are between, if you are scalping around 10 ticks, if you are auto trading, swing trading between 20 and 25 ticks, this is your limitation. 1 or 2 trade and then call it off, you lose a couple of trades, you're out of here, finished. You're using momentum, MACD, ATR. Your indicators are very basic, the same. They've been tweaked for the last 20 years, but the basic is still the same. The only thing has changed in the market in the last 27 years is 2 things. Is the internet. In our days, it was no internet. It was a satellite dish. On a bad weather in Switzerland, we get the delayed data a minute and a half, and it was no E-mini back then. It was a real ES, where you can lose $1,000 on 1 point. And the things is, the best things also come out by this ex-hacker. He came out with a Renko bond, and everyone copied him. That's around, 9 years ago. The third thing is the most important happening right now is the computers got smarter. They can handle more equations. And then NinjaTrader 8 can respond on how big is your computer is. So I can see between this office and the other office, this is a new computer, and when I'm optimizing, because my other computer is 1 year older than this one here, and when I'm optimizing, this one here is to swallow the whole optimization within split seconds, where the other office, it is a little bit slower, and that is the NinjaTrader 8. Unlike NinjaTrader 7, but NinjaTrader 7 had only 1 gigabyte RAM memory. On NinjaTrader 8, how big your computer, how many ROMs it is, the more comfortable you are when you are trading, and your NinjaTrader is not lagging, or your Autotrade is not lagging. For the technical guys, they want to put the Autotrade on the server, and they are using share ROMs, which would happen, they lag their Autotrades, because most of those $80 VPS, they run out of a garage somewhere in Chicago. We've had so many problems with it. We have a doctor, he was on one of those, and we can see he's been hacked, and we notified him immediately. The guy was poking in his account. Those guys, they run on 1.5 gigabyte RAM. This is, if you want to run NinjaTrader 8, you have to have at least 8 gigabyte RAM without 8 on anything, 8 gigabyte RAM. And then they try to sell him, or they try to sell you 32 gigabyte RAM on a VPS, or 16 gigabyte RAM on a VPS. But they are shared. I don't care what they say, they are shared. In other words, if there is a couple guys also using the same VPS, somehow, I don't know, I'm not a technical guy, but your 16 gigabyte is not belong to you. Now there is 2 guys are using 16 gigabytes, and now there is 3 guys using the 16 gigabyte. They say they're not sharing, but that's a bunch of crap. You cannot see it. What you see on your VPS, you have 16 gigabyte. Sometimes you see your Ninja Trader get up and works fine. Sometimes you find out your Ninja Trader is very slow because maybe there is somebody on the other end is also using your gigabyte, and both of you are paying full price for it. So on the VPS, I personally, if you are at work or you work or whatever, use your smart template, use your smart iPhone, whatever smartphone you have, put the team viewer on your home computer and use your tablet PC, or you can log in from your work and you stay controlling your Ninja Trader from your work or your car or your truck or your yacht, I don't know. And you will have the, you're in control with that computer at home, because if you have 16 gigabyte on your computer at home, you know you're getting 16 gigabyte. If you have 32, you know you're getting 32 gigabyte. So this is something, don't let those guys fool you with the VPS. Most of them, they run out of a garage somewhere, you know, and they look professional, but they are not. We had one customer got in on a VPS. He's using a cracked version. And I mean, you cannot trust everyone to share your personal accounts on a VPS from a guy running out of a garage somewhere. It's fine if you are using a big company, but don't try to use those $80 or $30 a month. Those lonely guys, stay away from them. And most of them are blacklisted anyway. Their IP address is blacklisted. Now Mr. Nasdaq is a fly-in and is going to have an impact on the ES. Well, the Nasdaq start taking off to the long trade. And this is the worst nightmare. This is the worst nightmare. Now look at this. When you really listen to me, guys, whatever system you are using, it doesn't matter. Look how the Nasdaq is flying up in the air here, okay? And look where is the ES. That is gonna cause in the market, look at the market analyzer, it's a total mess. That, look, the Nasdaq took a fly. The Nasdaq, the ES is dropping. And that is a disaster. This is a disaster in the market. Look, when you see those two guys, please don't use Ranker Bar. Please. Including my Ranker Bar. Don't use Ranker Bar to determine what is the trend. Don't. Use 1 minute. Here is the Nasdaq is flying. Here is the ES is dropping. When I see that, I close everything. I flat out everything. When I see that, I flat out everything. Because now does not end up. Does not end up what's going on in the market. Until both start going in the same direction, then we talk. Because right now, if we have the Nasdaq was flying and the ES is dropping, doesn't make sense to me. So you stop until they're both synchronized with each other again, and the market slow down a little bit, and then you take a trade. And as we see right now, this is a very fast movement, and you should hold on. Don't have respect for the market. Don't mess with it. It's not your game here. Don't mess with it. Let it cool off for 5-10 minutes. Start trading again. Because by the time when the market is going fast, what you are reading on the ES is becoming old news. When the market is fast, you have a slippage on the auto trade. When the market is fast and you are trading or auto trading market order, when the market is fast, you have a slippage around 3-4 ticks on the way in, 3-4 ticks on the way out, plus commission. It's very bloody expensive. When the market is fast, you are losing right. The first 8 ticks, they're not belong to you. Because when the market goes fast, and if you are not using a limited order, you're using a market order. Let's say you are trading in NASDAQ easily, you will have around 10 ticks of slippage. On the ES, you might gonna have 2 to 3 ticks slippage on the way in. On the way out, another 2-3 ticks slippage plus commission, you're doomed. So when you see, and plus what you see right now, the number on the ES, by the time your brain register is an old news. It's no longer valid because at your broker, those numbers are gone, long gone. So if you try to trying to catch a trend on a very fast market, most likely you're a dead meat. For the broker to send you those numbers and get them back to your broker is a very late news. And let me show you on the NASDAQ right now, on the auto trade. You can see right now the auto trade now on this fast market is not going to respond very well. I'm not talking about my auto trade, I'm talking about everyone's auto trade. Because of the slippage, commission, the fast market. The best way to auto trade, let's say on a Friday, early in the morning before 9:30, around 6 o'clock morning Eastern time, or around 1 o'clock, 1:30 in the afternoon when everybody go home. The market slow down a bit and you can start auto trade. It's like you are flying on a cruise, you know. It's just a smooth flight, no turbulence in there. So you gotta watch out when the market goes fast. You don't want to be in it. Another thing's also, when the market goes fast, there is a chance you might gonna get overfilled. And if you are not watching the market, getting overfilled, or your broker didn't close your position on an auto trade, your opening position become a closed position, and your closed position become opening position, and that is a disaster. So on a very fast market, first of all, your auto trade does not work. Any auto trade does not work. Now, if there is somebody smart out there and tell me, oh, my auto trade is working and I've just nailed $1,000 here, I have plenty auto trade nailing $1,000 here. I have plenty auto trade nailed 2,600 on that movement. But when you are at your broker, it's a total different story. when the market is fast, your broker sometimes cannot prefill you very fast. And then this is what you are sending a message to your broker that I want to buy market order at any price. That's what you are telling your broker. So if the number on any broker, I'm not picking on any broker. So if the number you wanted to say buy at 46.98 even, okay, buy. If the market come in at 46.98 even, does not mean you're gonna get filled at your broker. The only time your broker is gonna get you filled, if this 4698 go 1 millisecond below, then he gets you filled. But let's say if you have a market order at 4698 even, and the market came into 4698 even, your broker will never get you filled until this number go below. Then your broker will get you filled. This has nothing to do with your broker, but you have to accept the fact. This is based on a limited order. Now, if you want to tell him buy on a market order, if you notice how fast it is, it's jumping 3-4 ticks in the same time. So most likely you will get 3 ticks above the price. And that's what we call a slippage. Okay, guys, there is not much going on. There is, of course, there is a small trades, but there is nothing really going on. Um, it's really choppy day, and all of them are a small trade today. There is not much. There is no big trades. So the 30-year Treasury bond is about to close. ES 5 minutes is not taking any trade in those conditions right now. The TI7 took the trade and is going to close hardly with any money. And the YM broke even. But the way it is, the reason there is not much to be made, because if you notice here, there is a double support area. And what happened every time, this is really, every time the auto trade is taking a trade, making $500, $600, what happened? The market going back and closing that auto trade plus one tick. So every time you're taking a trade, you're making 500, 600, the market turn around and knock you out. Every time you're taking a short, it's doing this. Every time you're taking long, it's doing the same. So that's why there is no money. If you don't keep your eye on it, there is no money to be made if you leave the auto trades alone based on a trend and a stop and target. If you notice on all of them, look, like this trade here was $500 and stopped. That trade $800 was, and now $600, and it's going back to the break even. So if you don't keep your eye on those auto trades and maybe force close position by click the button, because what happened in here is not the auto trade, it's the way the market moving. Every time the market take a dive, your auto trade taking a trade, the market going back and knock you out of that trade. And it's been like this all morning. You see $500-600 trade, and then all of a sudden your trade is just $100 or a break even, a plus one tick. The condition of this market is not really, helping us with this. So we will leave it alone and try to be very careful with your trade. And we say thank you very much for today, and I wish you a pleasant weekend. And try to be careful if you continue trading today. You gotta keep your eye on the trades. So wish you really a nice weekend, and we will see you on Monday.